In your markets news, Asian markets traded mixed while they awaited more clarity on U.S. President Donald Trump's plans to impose tariffs this week on key trading partners. The U.S. Commerce Secretary is said to have commented yesterday that the exact tariff that would be levied against Mexico and Canada come Tuesday remained fluid. Meanwhile, it said that market players were also looking out for possible fiscal support from Chinese authorities to deal with the additional imposition of tariffs on Chinese goods. The Nikkei share average rose by 1.7%. The Hang Seng Index gained 0.3%, while the Shanghai Composite Index ended the session 0.12% in the red. U.S. equities closed higher on Friday, with all three major indexes making decent gains, but sentiment was rattled somewhat due to the well-publicized exchange between U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky in the Oval Office. On top of that, this came on the eve of a number of new tariffs that are set to come into place early this month, with talk that China may well retaliate in one way or another. The Dow Jones Industrial Average rose by 1.4%. The S&P 500 gained 1.6%, while the Nasdaq Composite Index closed up 1.63%. All right, let's take a look at what's happening on the local markets. We see that the all-share index is up 0.3%. On the rand, we see that the rand is trading at 18.65 against the US dollar, 19.46 vis-a-vis the euro, and 23.56 against the British pound. So we see that the local currency is a bit weaker relative to major currencies. In terms of commodities, gold is trading at $2,863 an ounce, platinum at $951 an ounce, while Brent crude oil is trading at $72.60 a barrel. All right, let's get into conversation with Gary Booysens. Thanks very much, Gary, for joining us. So with Europe now seeing the United States as a potential foe and no longer an ally, given President Donald Trump's position on the Russia-Ukraine conflict, how is this translating on markets, and what are some of the longer-term possibilities?
No, I think the longer-term possibilities are that you're going to see the Eurozone and the European Union having to take control of its own defence. So we're already seeing that play out in some of the defence stocks in Europe, the likes of Rheinmetall, BAE Systems, Saab, Leonardo, Thales, all looking very, very positive as the Eurozone will have to redirect spending to increase security. So I think that's a theme that we're going to see playing out over definitely the next couple of months as the US follows a more isolationist policy. You are getting a sense, even though we have equity markets a little bit higher, that there is this undercurrent of risk-off trade filtering through. We've got, as you say, the euro and the pound gaining against the US dollar. So we've got the US dollar index slightly weaker. We're also in South African rand terms, and we feel kind of that dichotomy between risk-off and risk-on trade. We're flat against the US dollar, but we are losing ground against the euro and the pound. Looking at, I suppose, again, long-term prospects for the Eurozone, given the tension that we're starting to feel. Interestingly, I think it could also assist with European manufacturing as they kind of do an economic reorientation to look more domestically. And of course, energy security is going to be absolutely key for them. And we know the EU likes renewable energy. So renewable energy could also be a theme that we see coming through in the next couple of months.
So some of the 25% US trade tariffs are set to come into effect, early this month. Are we expecting retaliation, and how do you see this all playing out for the global economy and markets? Can we, kiss goodbye, further interest rate cuts, for example?
Well, there's no question that a trade war like we're seeing unfold at the moment is going to be very inflationary. And what it's going to do is reverse a lot of the huge economic benefits that we've seen through globalization. It also makes the world a more dangerous place as well. So when nations are trading with each other, when components are made in various locations, and everyone is almost forced to be friends. And as everyone looks more inwardly at their manufacturing processes, that does, I suppose, elevate just geopolitical geopolitical risks. So will it be inflationary? Almost definitely. If it is inflationary, then yes, we would expect the chance of rate cuts to diminish. I had a look at the Fed funds futures. We're still pricing. It's roughly even money for up until the December meeting that we'll get either 2 or 3 25 basis point cuts from the US. In South Africa, we are a lot more hawkish. We've got our central bank is very strict when it comes to interest rate cuts, and our real interest rate is very high. But at the moment, we're pricing a 25% chance of another 25 basis points, so 0.25% cut. So yeah, a lot more hawkish from the South African Reserve Bank, but no big changes in the Fed's policy at this stage.
Yeah. While we're on the issue of trade and tensions, one particular stock comes to mind, Barloworld. They put out a statement today because when the Russia-Ukraine conflict started, a whole load of companies left Russia, but Barloworld decided to stick it out with an asset that they had there in Russia. But it seems as though it's caused them problems with US authorities for obvious reasons. Well, up until recently, the US has not viewed Russia in a positive light. Can you just give us some color about what's happening with Barloworld in this regard?
Yeah, so it was a voluntary statement, and essentially what's happened is that the Bureau of Industry and Security has extended the deadline in which Barlow had to report. So as you said, when the Russia-Ukraine conflict broke out, their subsidiary, which is Vostochnyaya Technika, I've definitely butchered that name, but it's called their VT subsidiary, which is Russian. They made the call that it was independent enough that they could continue to operate the business, despite increasing sanctions. But as the regulation has changed over the last 2 or 3 years, it looks like internally they picked up that they had imported certain components to Russia. Remember, they sell, big yellow machinery, so it's that Caterpillar equipment. But to complicate matters further, Barloworld is obviously also, under cautionary, and the Saudi Arabian Zahid Group, in conjunction with the consortium led by Cervela, is currently looking at buying out the entire issued share capital and taking the group private as well. So there's a lot of moving parts on Barloworld at the moment, and while the statement did come out, it is actually a positive statement because this was, I suppose, news that was in the market already, and it's good to see that they got the extension. But again, you're going to see the share price very, very stable around this kind of announcement because they still have that potential buyout offer on the table, although it does look more and more unlikely that it's going to go through. Yeah.
And of course, we've had a slew of results come out today. Can you just give us a couple of impressions around a couple of companies that you've looked at today?
Yeah, a massive amount of results. So yeah, we've got Metrofil, RCL Foods, Bidvest, Afrocentric, JSE, Italtal, MTN. There's a lot out at the moment. But I think probably the more interesting one is RCL. So the stock's up 8.5% on the back of the results, definitely surprising markets on the upside. It's a company that unbundled Rainbow last year, also disposed of Vector Logistics. Headline earnings per share up almost 40%. Revenue a little bit more subdued, up 5.5%, but really their groceries and baking business doing very, very well. If we look at Santam as well, Santam also very, very good results coming out of Santam. They've improved their underwriting measures, and that's really improved the profitability in the wake of COVID, obviously, where they were hit very, very hard. So their revenue up 21%, headline earnings per share up 51%. So also a very solid set of results from Santam.
Indeed. Thank you so much, Gary, for your time and insights. As always, Gary Booysens is a portfolio manager at Rand Swiss. We're going to take a quick break.